Hello everyone, I'm Laurette Kamenan, student in MSc Corporate Finance program at KEDGE Business School. Today I will present the comparative valuation of Apple and Hewlett Packard Enterprise, two major players in the technological hardware and equipment sector. Let's start with the industry context. The sector is shaped by data growth, AI, edge computing, and cloud integration. These forces are pushing companies to rethink capital allocation, especially in the context of supply chain realignments and geopolitical uncertainty. These dynamics are central to understanding how Apple and HPE manage investment, growth, and returns. Company overview: Apple is a $3 trillion consumer tech leader, generating most of its revenue from mobile communication and services. HPE operates in the B2B space with an $18 billion market cap, offering hybrid cloud and edge solutions. Whale valuation: Apple has consistently delivered CFROI above the market threshold. Since 2016, it shifted from asset expansion to efficiency and shareholder returns, with improved margins and aggressive buybacks. While asset turns have declined as the business matured, recent stabilization suggests better capital discipline, supporting a high valuation. HPE, meanwhile, shows solid CFROI and efficient asset use, but its sales growth is limited, and total shareholder return has lagged due to revenue volatility and external headwinds. Let's discuss our flex valuation for Apple. We adjusted the default Holt assumptions to reflect strategic shifts. Apple's revenue growth is slowing, impacted by declining sales in China. However, this is partially offset by strong performance in services. Margins are under pressure from rising production costs and supply chain related investments. We also expect a slightly higher tax rate, driven by reduced global tax optimization. R&D intensity remains high, with ongoing investments in AI, AR, and custom chips, which support long-term positioning but weigh on near-term efficiency. Based on these insights, we estimate a warranted price of $110.50, above the Holt base case of $163.48, but still below the market price of $202, implying a mild overvaluation. For HPE, we see moderate growth, led by its transition to an as-a-service model via GreenLake. Margins are expected to improve slightly with recurring revenue, though costs and trade tensions remain limiting factors. We applied a conservative 17% tax rate and expect asset turnover to decline due to increased asset retention in the cloud model. We estimate a warranted price of $18.05, which is slightly lower than the Holt valuation but still above the market price of $15. The market may be undervaluing HPE's long-term transformation potential. Conclusion. To conclude, Apple remains a strong, mature performer, but its stock may be overvalued at current levels. HPE, on the other hand, offers more upside, supported by improving fundamentals and a pivot toward recurring revenue. Thank you for your time and attention.